Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to be with you today. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is 8491-432-6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe to the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyễn. She's a personal financial advisor and a Viet Capital Securities stockbroker manager. You can contact her with the email hongjiangyuan@vcsc.com.vn with the phone number is 8491-432-6556. And we always welcome you to our office on the 11th floor, 109 Trường Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And today I'm going to share about with you the Vietnam Strategy 2023. Let's continue with the construction and materials challenging year ahead. Narrowing price spreads squeeze steel makers' margins in 2022. However, absolute prices and spreads have fallen close to their previous lows in the 2020-2023 cycle. From mid to late 2021, there was a historic boom in steel prices that we believe was due to a demand driven by price rally resulting China's infrastructure developments following the outbreak of COVID-19 in 2020. This was followed by a construction in late 2021 and early 2022, which was due to China's steel output restrictions ahead of the winter season and the Beijing 2022 Winter Olympics. There are two more significant factors that weigh on steel and steel-related commodity prices for most of 2022. One, weakened global demand, especially from China and the US, and two, the stagnation in domestic property markets starting in October 2022. These situations caused a strong correction in prices of export-driven steel products like HRC and galvanized steel, and also more domestic-driven construction steel products from their peaks in mid-2021. This resulted in steelmakers being trapped with high cost purchased input inventory while subsequent sales were slow, translating to a strong gross margin construction and historic net loss for steelmakers in Q3 2022. However, as figure 346 indicates, the current absolute price of HRC and galvanized steel, as well as the price spread between the two commodities, correction to nearly the average level of January 2009 to March 2021. We believe the data suggests the current HRC and galvanized steel prices and the price spread have dropped to close to the bottom of the 2020-2023 cycle. Figure 347 also indicates a similar pattern for China's rebar prices. Against this backdrop, we expect a possible price uptrend in 2023 across steel products that will be driven by one, China's recent moves to end its zero COVID measures, and two, increasing domestic infrastructure disbursements. Therefore, we expect 2023 forward margin across the steel makers under our coverage. PHE, HSG, and NKG to increase year-over-year as high cost inventory is depleted and steel prices rebound from a low base. Figure 346, Shanghai Sports, HRC, and imported galvanized steel sheet presses. Denmark iron ore, hard coking coal, and China's rebar presses. HPC's average construction steel domestic prices. We believe the main potential downside risk to the above assumption is a possible constructural slowdown in China's economy that causes prices and spreads to drop further to a lower e- equilibrium base level. This scenario could create prolonged pressure on steelmakers' margins. Nevertheless, our opinion is that a more stable movement of commodity prices, even at low level, will still create a less significant negative impact on producers' margins than if there is a strong and fast correction in prices that cause producers to be stuck with high cost inventory with little time and room to adjust. Commodity price trends to weigh on margins for HT1 and BMP in 2023 forwards. HT1 high thermal coal prices continue to be in high trends to 2023 earnings. Thermal coal prices have rallied since late 2021 and remain high throughout 2022 as a result of a supply squeeze, especially in Europe, caused by the Russia-Ukraine conflict, and two, a tightened coal supply as China's curbed domestic production, which is partially linked to the country's goals to control emissions as well as strict zero COVID measures led to lockdowns in many parts of that country, including coal production hubs. HT1's management expects average coal cost to fall Q-of-Q in Q4 2022 due to the company clearing out accumulated high cost and inventory in Q3 2022. However, as coal prices climb again in Q4 2022 due to seasonal winter demand picking up, while a fresh round of COVID-19 lockdowns has dampened supply. We expect H21's input coal prices to remain high throughout H1 2023. Reference thermal coal prices. BMP, we expect plastic input prices to inch up from a low base and result in a margin normalization. BMP's Q3 2022 gross margin jumped to 28.3%, a quarterly level not seen since 2016 compares to 25.1% in Q2 2022 as put PVC and HPPE plastics resin prices trended down for most of 9 months 2022. This strong margin expansion was also thanks to input plastic prices correcting from their high base in 2021. However, we expect gross margin to fall year-over-year in 2023 forwards. As we are conservative regarding a further reduction of input, mostly plastic resin prices, while there is also a challenging demand outlook for the private sector. BMP's main input plastic prices compared to oil prices. Share prices of galvanized steel producers are highly correlated with underlying HRC prices, while those of other construction material companies are much less. With a sharp production price, process, and value chain. The earnings of Vietnamese government steel companies, including HSG and NKG, are driven primarily by the spread between HRC and galvanized and product price. Therefore, share prices of these companies usually follow the expected direction of HRC prices without waiting for confirmation from reported margins and earnings. Later in Figure 351 illustrates this point as the share prices of HSG and NKG have a high correlation with our HRC prices with almost no lag time. If our assumption that HRC prices and price spreads have dropped nearly to the low of the 2020 to 2023 cycle is correct, then the share prices of HSG and NKG may have also corrected close to the bottom for this cycle. Other steelmakers, such as HPG, poses a longer and more complicated production chain. Therefore, the output and input spread movement of vertically integrated steelmakers is more complicated. Even in a scenario of steel prices rising, if input material prices rise at a faster pace, HRC prices and share prices of HSG and NKG, iron ore prices, hard coking coal prices, and HPG's share price, rebar iron ore price spreads, rebar coal spread, and HPG's share price. Stock picks for 2023. For factor HPG, we reiterate HPG as our top stock picks to gain exposure to Vietnam's construction sector. We believe HPG's leading position with its established scale and proven operational efficiency are the drivers behind the company's growing market share and earnings. Moreover, with its capacity expansion and product diversification through the ramp-up of Zungo Steel Complex 1 and investment in Zungo Steel Complex 2, SPG is well positioned to capture future domestic construction growth. We forecast a 21% 2022 to 2027 forwards net profit after tax MI CAGR. We forecast 2023 forwards net profit after tax MI of 13.1 trillion Vietnam dong, 541.4 million US dollar, more than 45% year-over-year, which is driven by one, a higher spread between output and input prices, and two, lower foreign exchange losses. We forecast sales volume across products to be flat year-over-year in 2023 forwards due to weak demand in the domestic private sector as well as for exports. We view HPG's current valuation at our 2023-2024 forwards PE of 8.1 times, 5.8 times, and PE of 0.8 times, 0.7 times based on our forecast. Compares to one, the other year average of the regional year TTM PE median of 5.8 times and 5-year average TTM/PE of HPG of 8 times as attractive against the company's growth outlook and the superior profitability compared to regional peers. Please see more details on HPG in our latest update reports. Being plastics, BMP. BMP is our favorite defensive name in the construction material sector due to its more stable earnings compared to steelmakers and solid dividend yield with a low financial risk. For 2023 forwards, we forecast modest sales growth of 2% year-over-year as we expect less domestic construction activity in the private sector to have a prolonged impact on construction material demand. We forecast 2023 forwards net profits after tax MI of 575 billion Vietnam dong, 23.2 million US dollar, more than 1% year-over-year as we are conservative on a further reduction of input plastic resin prices from the low base in 2022. BNP has no long-term debt and strong liquidity ratios with project 70% to 75% cash dividend payout ratio in 2022-2027 forwards, projected dividend yield of 8.3%, but see scope for higher payouts based on our cash flows forecast. Please find more details on BMP in our latest update reports. Appendix company names and codes. ACG Angum Working Materials, BMP Mingming Plastics, CTD Cotecons Construction, PHE Hòa Phát, HPT Hòa Phát Group, HT1 Hà Tiên One Cement, HSG Hòa San Group, NKG Nam Kim Steel. Yeah, and that brings me to the end of my presentation about construction and materials. So if you want to open a legal trading account, don't hesitate to contact with us with the information on the screen so that we can assist you. So thank you for listening and see you next time. Have a nice day.